I think the investment thesis remains much the same as it has been for the last few years, which is if you can tell me something that's going to generate a better return than equities, then I'm happy to have a look at allocating some cash to that. As things stand at the moment, with bond yields still at very, very low levels, commodities looking expensive, but having limited means to be able to really play those effectively. What does that mean? It means that you're always going to be looking for earnings growth and you're looking for a reasonable dividend yield, which is still applicable to the equity market. Now, that means continuing a balanced view, but with an equity heavy focus.
And if you're saying equity heavy focus, where does the story go forward from here? Is it more US equities, rest of the world, Asia equities, and within Asia, where?
Yeah, I mean, we've been looking at really playing the COVID recovery. Perhaps with the benefit of hindsight, that's now looking a little bit premature, particularly as regards Asia. But nonetheless, the Asian market area still looks to provide better relative value, if only because US stocks have done incredibly well over an extended period, and they continue to outperform in the first 5 months of this year. Will that leadership position change? I think ultimately it will do because we're going to start getting more of a focus on export-driven economies, and Asia specializes in those. So where do we put that money? Well, we've seen that Vietnam, for instance, that's been a core holding of ours for a very long time, a small market admittedly, but we continue to like that. Other markets within the Asian region tend to favor the China story, the China recovery. Obviously, we've got some issues with regulatory changes and regulatory scrutiny, as we've seen, but those are our key picks.